Hey everybody, Bush, this is Vicky Force. Welcome to the Weekly Technicals for July 1 to July 5, 2019. Odd dollar, dollar CAD, Kiwi dollar, the commodity dollar complex, which has been relative strength this whole week. It's been truly the bid trade this whole week. Partially, I think, of course, because U.S. yields have now dumped all the way down to the 2% on a 10-year. That's really helped the comp dollars. Perhaps also market feeling, certainly positioning itself positively ahead of the Trump Z meeting, which we will know the results of by the time you guys get this video. So it'll be interesting to see if we can get continuation. Certainly a bullish resolution to the trade issue would be very bullish calm dollars and provides scope for even further extension. They are overbought, clearly very strong, but the momentum could very much continue if we get a fundamental catalyst. If we don't, the retrace back to the SMAs is very likely a proposition as far as the technicals go. Let's take a look at it, support resistance first. Aussie now is 70.50 resistance, really 70.50, 71. It's a very chunky area here. It's really got to clear a pretty significant amount of resistance. CADI looked like it made, at least on the charts, a spike sentiment low at 30.50, just kind of an exhaustion low. And it looks very similar to the exhaustion low that dollar yen made. So you trade against that on the assumption that we get a little bit of a mean reversion come back to the 32s, 32.50s. And Kiwi dollar, the strongest of all, really barreled through that 67. Very, very powerful move, very impressive move. But at this point now, looks also mildly ready for consolidation. On the funded calendar this week, not too much on the calm dollar land. As a matter of fact, I don't think we have anything. Well, we have the RBA cash rate target, which of course that's big, but it's expected with the RBA cutting by 25 basis points. That could be a small catalyst for a little bit of a mean reversion. But remember, that's pretty much priced in. The critical thing is, I think the RBA is going to be more hawkish than dovish in the sense that they're not going to say, yeah, we're on path to cut rates even further if need be. Of course, it's all in flux. It's all going to depend on just how bullish or bearish the Osaka summit is by the time we get there. So a lot of this is going to be very, very fluid and dependent off of what happens in Japan this weekend. So it'll be interesting to see. Generally, the default position of the RBA is we're going to cut once and then just see how things go. We're not going to cut more. Then moving further into the rest of the week, we have building approvals, trade balance, all sort of second-tier data out of Australia, nothing on New Zealand. And then into the close of the week, we have the Canadian labor data. That's very interesting because Canadian data generally has been positive to beatable. Now it's sort of good to positive. It's been leaning more to the upside and to the downside, pretty much all across the spectrum. So it'll be interesting to see if the labor component continues to outperform. And if it does, it certainly gives CADI scope to move to the 130. If it doesn't, it's the perfect setup for a move back up to the 132s. Still very much, honestly, when you look at the G7 universe, Canada is one of the strongest economies out there with probably the most hawkish central bank out there. So really hard to fade the loonie, but fade, I think you must on just technical purposes, just for a small bounce back, especially if you anticipate any kind of mean reversion on the funded side. Let's take a look at the charts here, see what's going on. So I'll start with the Kiwi because that's really been the strongest trade this week. Look at this very strong W formation. We took out the highs over here, very, very bullish sign, but it's pretty stretched back. So it's certainly scope here for us to come back and trade to the 66.50s, perhaps even in sympathy with the RBA, which is very likely going to cut. But overall here, it's a bullish move. Certainly suggests that the base, the 6500s, or 6500s basically, very much in place. That this is now the near-term low against which you trade. The tide has turned to the upside, and really until and unless they break the 20 SMAs on a continuous basis, you pretty much buy the dips here. This has really gone from sort of a consolidation story to really strong buy the dip story as the trend looks to be in place, and we certainly have scope here over the next month or so to move to the 68s if we get any relief on the trade front. Aussie, very similar story. Aussie, what a bid. Look at that, 70.21 into the close. Really closing through the 70. That's a very, very confident close. It'll be interesting to see, of course, though, what happens in Osaka, because that could be a very sharp decline if there is some truly bad blood. I just don't think there will be. I think the market is right in anticipating that they want to make a truce. So despite all that, a lot of it is kind of baked in the 70, 50, 71, very, very chunky area. But the thing I think that is interesting, whenever you see these multi-day rallies, the natural instinct to say, oh, it's grossly overbought, it needs to be corrected. But it's precisely these kind of multi-day, unrelenting rallies that really provide scope for surprisingly strong moves. So I don't think it's out of reason to suggest that we could push to 71s here if we get positive flows here. Like, this is not the time or the place to fade this move until and unless you get at least a daily pause signal, until you get a daily turn signal on the candles. This is not a place to stand in front of a running train. This train is a locomotive, and it looks like it could go for at least another 100 points before it finds true resistance in this 7150, 7200 area, which is a much bigger overhang. So overall, props to Aussie. Looks like it's going to be a strong trade. Caddy too, but Caddy here, my sort of main argument here is you see the exhaustion spike at 30.50 over here, the exhaustion spike at 30.50 over here. So long as that holds, basically you're not trading against a very large risk here. It's a really small risk, but as long as that level holds, and let's say holds within 25 pips, you got to believe that is for the near term the sentiment bottom, and we have a little bit of scope here, maybe 31.50, maybe 3200 as it tries to trade back to the SMA. Of course, you need oil to come off a little bit, which it has actually, and you need to, the market. Really, you're not going to get any funded catalyst. You certainly get the China catalyst. If that's mildly negative, that's going to be negative Caddy. If that's positive, I don't know how much more positive it will be, but I just certainly think that just from a purely technical point of view, I like this as a setup. And funded be damned at this point, because you have a very small amount of risk. If I'm right, the turn is going to happen with minimum amount of risk. If I'm wrong, the risk is relatively small. So that's kind of how the COM dollar is set up. They are still very strongly bid. There is no sign that they're kind of slowing down, but they are clearly entering into some very big resistance areas. So for now, you either just trade with a flow with a tight stop, wary of the reversal, or you stand back because it's not the time to fade it until you get a good signal to fade it. Wish you guys the best luck, the best trading. Boris Schlossberg, over and out.